Welcome, everyone. Welcome to the Hurley Investments Market View commentary for the last day of March. I've got some information for you, but I want to hit a couple things first. A lot of you have left for me the comments that you wanted to talk about tariffs and what it really means. And I've got three emails, so let me find the email stuff. Okay, so let's go through a couple of these really quickly. All right. First comment that was said to me. Tariffs are a tax on items imported that we buy. What do you guys think? Is that a fair? I guess the short answer is that a fair statement. What do you guys think? I mean, to be honest with you, yes. I agree. I agree. Tariffs are a tax on items imported that we buy. I'm going to also say, though, that does not mean you have to buy that brand. All right. Second question that I found very interesting. Tariffs are hurting our markets. So I would love anyone to tell me, how are our tariffs? And I'm going to say, let's put that into better. I took the shortcut. Are hurting our stock markets. So really quickly, someone tell me, how are tariffs hurting our stock markets? I think there's only one answer, but we might get a different answer. And of course, someone sends me a different answer right out of the gates. Uncertainty. That was not my answer, but that is 100% correct. Just the unknown. On again, off again stupidity. I'll agree with that too. My thought process was fear. I think the tariffs hurt our market in regards to fear. And I'm going to go for today because today was ridiculous. Market was down in the first hour around, and it might have been down more, a negative 1.63. And this is on the SPX, the S&P 500, right? Market finished, which is completely unheard of. The market finished up, what, 0.55? I think that was where we were at, right? So last day of the market, we get an up day. Now here's the problem. How many people sold off positions, added huge protection, closed spread trades, or just gave up? For me, I know a lawyer who sold positions and was done for the year, going to go into bonds. And that was on before today. That was on the fact that March before today had the S&P. It was down to negative 6.27 for March. NASDAQ. And NASDAQ's down worse today because it finished negative. And Dow is down negative 5.15. And that was before today. So this morning, I know of a lawyer, law firm, RIA, that basically threw in the towel. Threw in the towel on a 6.27% downturn month on, a little over 10% from the highs for the year. Gave up. I know an educator who basically is stopping his picks. And I also know of a friend who basically bought so much protection you don't know. He doesn't know what to do with it. I mean, he lost coming and going. And this is something again that I'm trying to help people understand. If today was a single event, then you lost big time trading. But investing is a process. And to be honest with you, I keep trying to put this into people's heads because I know some people who are already down year to date over 20%. They're in all of the mag sevens, trading them straight out the gates. Brutal, absolutely brutal. And I'm going to be the first one to tell you, yes, I've got a process, but unfortunately my process doesn't have a time frame. Yes, going from 2021, my process allowed us, anywhere from a 68 to an 84% return. I love when I'm allowed to use my process. Schwab did not help me. But our process comes down to my second point. We're going to go back up to tariffs here in just a second. But my process comes down to my second point, which is how long can you last? And I'll be the first one to say, nobody lasted long enough through 2008. 2008, first time we saw this kind of volatility. Yes, Hurley Investments was slightly profitable, but 2008 ruined generations of investors / traders. Killed people. Some people had to get out and take their losses and be put into bonds because of risk tolerance. Shocking. Our process is to make something can't spell, on the way down to add to your share count for an exponential return higher. That's the key. And it's all based on pictures, screenshots. It's all based on this chart. If you take a 10% loss, you need 11% to get back. If you take a 20% loss, you need a 25% return to get back. A 30% loss, you need a 43% return to get back. A 40% loss, you need a 67% return to get back to break even. And a 50% loss, you need a 100% return to get back to break even. This is why the buy and hold no longer works. Well, Kevin, we made, 48% in the last 2 years if you bought and hold. I get it. You are going to have some good years. But over the period of time, it really hasn't worked since the end of the Vietnam War. Hence, that's why we have so many Walmart employees. It's why people are so excited to be saying, hey, we made it. We made it into retirement. We made it, we made it, we made it. If I could tell you when things would come back, I would. Here's my best answer for when things come back. As soon as someone big quits and gives up. That's the key. Our move today was to add Bank of America protection on and to roll down NVIDIA short puts. 2 moves. 2 simple moves. We still have other protection on things that were down. We have short calls on stuffs that were up slightly today. I love the way we're positioned. But we have some fears for this week. And we have some fears that are going to be obviously not very good. ADP employment numbers on Wednesday. Not to mention, it's Liberation Day. Liberation Day on tariffs going into effect. Unfortunately for Liberation Day, we may also have reciprocal tariffs going into effect. Average work week on Friday, no non-farm payroll, private payrolls, numbers are all down there. In fact, numbers look really bad. We'll probably have a down week, even though we did okay today, even though we have money coming into us in the near future. Now, it's funny. 2 of you just says recession incoming, and we're close to a recession. As of last week, that is not true. Nor are we on a path. And I've got a really interesting article I'm going to mention that I'll show both of you in regards to that. But Liberation Day equals USA doing what's been done to us for, and this is up to decades. Can't spell very well, apparently. Doing what's been done to us for decades back to those countries who have tariffed us. So here's the question. Is it fair? What do you guys think? I see a couple yeps coming in. I mean, the short answer is who knows? U.S. Corp's wanted to start off showing more profits. Yeah. So we have more profits than other countries. I get that. But the question was, is it fair? Reciprocating tariffs is fair. If they do it to us, we should be able to do it to them. The question is, though, is it right? We live in an international taxation distortion, not with the US, but with many others. The real solution is to drop the minimum export and local taxes everywhere. Very interesting thought process there. We will pay. Interesting thought process there. Kevin, you need to do a better job defining right from wrong. So there's the difference right there. Everyone has a different moral compass. Heck, I mean, let's be honest. We funded NATO for the last 70 years. The United States is bankrupt. The United States can't pay off our debt. What would you do to your child if a 16-year-old, if a 21-year-old ran up $50,000 of credit card debt on a student salary or a minimum wage salary? Would you take away his phone? Would you take away the credit card? Would you take away the car? Would you have him sell some stuff off to pay it down? Um, I think the country will have to endure some pain to stabilize manufacturing, to stabilize the ridiculous housing prices we have right now. I mean, I'll be honest with you, I feel like I'm an idiot for not selling my house. 14 years, it's worth 433% more than I bought it for, 14 years ago. It'll probably be worth half as much 10 years into the future. If I was smart, I would sell my property and sit back for a couple of years. I'll let you guys know the market was scary today. It was fearful. Thank goodness we had some things in place already. And the thought process again comes down to, for those that asked, how come we didn't freak out? How come we didn't add a whole bunch of stuff on? How come we didn't clear out of some things? Our trading is our process. Our process allows us to sit through the harder days without, can't type, without having to make a knee jerk reaction. Does that mean we always beat the markets? It doesn't. Does it mean we have to wait for years maybe for positions to come back? Most definitely. And very interesting comment here. All manufacturing will be done by robots in the not too distant future. All this bring back manufacturing to the 1950s economy seems ridiculous. Tech, Google, Apple, startup, that's the future, not manufacturing. It's interesting. Define all manufacturing when it'll be done by, because NVIDIA just told us it's at least 30 years out. And I hope not. I hope there's still some human element to this. And again, the comments that are made, Google, Apple, technology, they all have hundreds of thousands of people. That's where the manufacturing is. And I don't believe that looks at any new car manufacturing operation. Yeah, there are some new ones that are doing that. They're not doing really well. Tesla's kind of in trouble, right? All those recalls that people are missing because they're robots. I know Ford is looking at downsizing their automation and getting it back to more people because of the tens of millions of recalls on mistakes that were done that weren't caught. But I don't know about anyone else, to be honest with you. So it'll be interesting. I know the comment was made that doctors and teachers will all be robots in the future here. In my lifetime, I'm not sure I'm going to trust a robot to be my doctor. I do see a lot of teaching happening online, but it's really hard to ask a question. I do know that the robo investing does very poorly. That's a good way to lose 70, 80% in a quarter with robo investing. The ins and outs. Because they're programmed to buy or sell, not to stop. Someone asked Kevin, why are you really putting in here this chart? You used to have one that only went up to 50. Well, robo investing. You lose 60%, you need 150 to get back to break even. 70%, you need 233%. You lose 80% of your portfolio, you need a 400% return to get back to break even. And heaven forbid you should lose 90, you need a 900% return to get back to break even. It'll be interesting. It'll be interesting to see where we go when technology can think for themselves. But it doesn't seem like technology will be able to think for themselves anytime in the future. It's all programmed. And because you can run speed to find an answer, that isn't a thought process. Again, it's interesting that Ford's looking at downsizing their automation because the robotics misses things or causes recalls. So be interesting to look into the future. But the good news is, and I can't explain why we were up today, but fear is definitely running our markets. Anytime you look at the Microns and the Nvidias and the Apples and the Googles, they made so much money and were punished in their earnings. Those are the ones that you'll see bounce back relatively quickly and relatively fast. Disney, a lot of people running away from Disney. We need to remember that they've replaced 16 to 18 of the VPs that were before. Yes, they did release Snow White. That's getting horrific box office numbers, but it was already paid for. That's what's already paid for 2 years ago. Anything they make back is more money into their coffers, so to speak. Let me go through a couple other positions that I want to make sure I'm talking correctly on. I mentioned Apple. Baidu is one that we probably need to get out of because Trump will kill that opportunity for us. That'll be our big losers this year that will hopefully book a loss on that. Disney, again, I mentioned. Google should be okay working into the future. Halliburton, it's interesting because Halliburton has had a very, well, it's been knocked down over 20%, and it's one that is not just a gasoline seller. It is a finder and what's the word I'm looking for? They process the fuel. So it plays on all three levels of the energy on that side. Again, NVIDIA should do good. Banking should be good. In fact, I saw this on, I want to say it was CNBC, and this is something that's I thought was pretty interesting. Again, this is CNBC today. The comments that consumer discretionary down upwards of 13%. Great spelling, I know. Sorry, guys. 13%, and tech down 12% plus. And it'll be interesting to see where things rebound to. Getting back to what caused Fridays. Friday's big down day. Core PCE jumped up to 0.4 when the consensus was a 0.3. The month over month was 0.3, which is expected to be 0.3. But the interesting part is talking about an overreaction on Friday, the core PCE index that came in at 0.4 dumped a 0.5 or a 0.6. I can't remember which one dumped off, but it dumped it off, which still left our revised number at 2.8 year over year versus 2.7. And it was 2.6. So here's the question. Are we fighting inflationary numbers? Are inflationary numbers coming up? And a lot of people, again, are going to go back to the tariffs. Well, yes, we have tariffs. Well, for the first quarter of this year, and into easily the second quarter of this year, the tariff pricing is not going to be involved in any of these numbers. Kevin, how can you say that? Because the inventory numbers have gone up. Companies were expecting this, so most of them are sitting at a 90-day to 120-day inventory. They were expecting this. If anything, it's going to juice GDP for our first quarter. And two interesting comments. I expect demand to slow down, so inflation should not go up. And the other comment is I'd expect the consumer to start to save, where they won't spend as much. I would agree with both of those comments as well. But we won't see inflationary numbers won't hit until the August numbers report. May, June, July, August, July, right? April, May, June, July. Yeah, we won't even see those till the August numbers. We'll get the first hint if inflation's going to be taking off. So I found it interesting that as we went through everything, a lot of it was right on that line. A lot of people are saying consumer spending was the difference. The interesting part is, and I'll be the first one to say it, nobody knows. So let me make just one more comment. To the person that sent me the fact that Reagan didn't believe in tariffs, yes, thank you for sending that to me. In no way, shape, or form do I think Reagan was a perfect president. But yes, I enjoyed our economy when he was here. That was through my high school years, which was somewhat interesting because that's when I first started paying attention to who presidents are and what they do. But I will say that free trade killed the mom and pops, which is scary because if, and I boy, I don't remember what the numbers were, but if X amount of people work in a small business or created their small business, that's where free trade killed the small business. That's where Amazon killed the small business. That's where tariffs didn't protect the small business owner because we weren't doing them in any fashion that affected or helped out small business. Briefing. I love their comments. Hard data measures actions, soft data measures thoughts. Consumer sentiment surveys are the best examples of soft data. Hard data matters more as a guidepost for the economy, monetary policy, fiscal policy, and earning prospects. It's interesting because we see a high frequency of soft data. And I'm going to read that comment in a second. In fact, I agree with both of those comments. So I'm going to go to it in a minute. I think for making this a buying opportunity, you have to sift through soft data. We need to pick up more shares of Micron and Meta and Google and be ready to use stock replacements when our market turns on the Mag 7 for buying 10% of the value of the stock for a quick rebound back higher. But the key is to push the soft data to the side. There were two comments that were just made, but I actually do want to read two more things. I'm going to get to both of those in just a minute. Interesting comment was, interesting mention in this was, the economic reports, however, are not all equal as market movers. So the understanding is to understand which is important and which is not necessarily not important, but what is soft versus hard concrete numbers. Again, I might be the one that's going to piss someone off here. I think the media used to be better when it would report the numbers and let you think what you thought. This pushing of ideas in the news or personal thoughts or disinformation, misinformation, the news has changed where they're trying to give us our opinion. For years, I've told you, you've got to check what's being told to you. You have to check the numbers yourself. It's not because I'm a Mr. Trump, it's everything's fake news. No, it's just you should fact check yourself. If you're going to comment on something and manage people's money and record it and put it out there for everyone to hear, you sure as hell better fact check where your numbers are coming from so you can reference them. It's shocking how many people have an opinion on something they think they've heard and they have no clue. Two comments were made by you guys. People are addicted to cheap goods. Thank you, Walmart, right? That is why the Amazons, Walmarts overtook the small business. That is true until a point. It's interesting because I think as you get to a point, you'll start to help out those that are around you. I still remember a friend of mine going, actually, let me make this comment, and it's going to coincide with the other comment that was made that I haven't read yet. If your time isn't worth anything, then it's easy to buy cheap and think you're saving. I have a friend who chose to not spend $8 to get his ticket, his registration sticker. He would rather go drive a half hour down to Provo, spend 45 minutes in the DMV and pick it up, thinking he was saving $8. As I looked at him and said, damn, you're going to waste $12 in gas to save $8. And apparently your time isn't worth anything to save $8 and sit in the DMV for 45 minutes. Round trip, it's going to be an hour and 45 minutes to 2 hours. When you could spend $8, get your sticker, put it on your car, and be done in 2 minutes. 2 minutes versus 2 hours. Are we becoming dumber generation from generation? Maybe. Or we're thinking that it's easier. I've got another friend, thinks he's saving money with Uber Eats. Kevin, I'm using your logic. Costs money to drive to a store. Food is expensive. You just spent $44 damn dollars plus the Uber Eats fee to get your 3 kids, you and your wife, Chick-fil-A. I'm pretty sure you could have fed your family for half of that. Well, you got to make it. Your time's got to be worth something. Okay, if you want to go that route, I'm pretty sure you could make a sandwich and it doesn't take that much time and probably saves you $40 out of the 55 you just spent for Uber Eats. At what point do you pay for quality? I don't buy my jeans from Walmart. Walmart jeans lasted me 3 months if I was lucky. Do I pay twice as much for, oh, they're not Levi's, whatever I'm wearing? Yeah, I spend 55, 60 bucks on jeans. I don't get them for 25 bucks. Someone just said he probably pays for Uber Eats and installments too. That's funny. At what point are you going to pay for your quality? We shop at our local market here. It's not a big one, but I can come in without a question and exchange a gallon of milk or have some fruit that goes bad or something. They take it back without asking questions. It's interesting. When will we pay for quality? Our data that we're getting, even Chair Powell acknowledged that the hard data says that they're showing that we're okay, that we're not into recession. That's the best way to say it, that we're still in good shape. The soft data showing significant concerns, downside risks, and those kind of things. The hard data, we're nowhere close to a recession. In fact, the hard data, and with one more month, we can't get into a recession in the rest of this year. Where do I think our market's going to end this week? Lower. I think we have a fearful week. We're coming right up to the Dow hitting the 200-day. Still bearish. I don't think we'll have good enough news to pop above it. If we do with new money for coming in April, we'll probably head back down. In fact, today might have been new money going in just a little early. S&P 500. We could have a couple days going higher, but again, we'll probably not have good average work week numbers. We're probably heading down. NASDAQ looks no different. We hit new 6 months lows today on all three indexes. Nope, on two indexes. We did not hit on the Dow. Excuse me. We didn't finish there, but yes, we hit lower lows today. We did bounce back. That's something you need to pay attention to. Where will the S&P end April 2025? I'm going with 4%. I said 4% last month. I started at 2 and 2, 2.5, 4 and 4. We actually finished down about 5.75% for the month. Do I think we're going to rebound quickly? No. Why? Because again, we've got a president that can't shut his damn mouth. Until Trump learns to shut up, even if he is doing the right things, we don't have a quick rebound in place because that is part of the fear that's going on right now. A president that won't shut his mouth. And to his credit, it's an administration that won't shut its mouth. Very little earnings. PVH had great earnings. Blackberries on Wednesday, Guess Jeans on Thursday. Economic report, Chicago PMI, which came in better than expected today. Chicago PMI came in at 47.6, better than the 45.3, but it still shows contraction. ISM manufacturing tomorrow will probably still show contraction. It's at a 49.8, but if manufacturing is at above 50 and shows expansion, then you don't need to worry too much about those tariffs. Construction spending coming in at 0.4. If construction spending comes in higher than a 0.2, we have an expansion and we're doing okay. ADP is a low number. It's only 120,000 of new jobs. That beats being negative for jobs, but it's Liberation Day. Watch us, watch the United States put 10 or 15 other countries on reciprocating tariffs. Is it fair? Damn right it's fair. Is it the right thing to do? I don't know. It seems like it might be better to have the talk. Let's put it this way. If you have a big stick, doesn't mean you have to use it the first time you get into a disagreement. Talk, set it up. You're the master negotiator. Go talk. Don't use your big stick. ISM services on Thursday, which are but they're still in growth mode at 53.2. Non-farm payrolls only 130K. Private payrolls only 120K. Probably after ADP, those expectations will change. If ADP is above the 120,000, you're going to see those estimates go higher. Unemployment rate's expected to be at 4.1. Hourly earnings are still expected to grow at 0.3. So again, zero risk for a recession. How am I looking to trade? We're still protecting for technical crossovers and downside to the downside and tariff risk. We were mostly protected today. In fact, I really wish we would have had a big down day. My goal, frickin' just go down and hit the 20% in bear market territory so we can pick up more shares and see a rebound maybe this summer. It'll be interesting to see. A comment was just made. It's a way to make it happen faster. So I would almost agree if people weren't doing reciprocating and putting their tariffs higher. So in most cases, I would say yes, but the tariff war is not making it happen faster. If you're putting new tariffs on and creating more laws and you have to take those off, that's not making it happen faster. And getting results, some much in today's world could take decades to make change, would be unfair to less fortunate people. I'm okay. Yeah. Uh, kind of, but no, I kind of disagree right now with it. All right. Last week, Trump announced a 20% tariffs on all cars not made in the United States. Going to bring that manufacturing back. And it was interesting. The comment was made earlier, well, it's all going mechanical. Well, it's not, though. A lot of it's just going to where it's cheaper. So let's be honest. I mean, Ford's been making their trucks. Let's put it this way. Ford's been making their trucks out of steel versus aluminum. Ford has not had the best gas mileage. Ford has been one of the least or last ones to move stuff overseas, even though they do have huge plants in Mexico. But I'm a Ford guy because Ford didn't screw over decades of employees that have retired. Ford didn't take the government money. They didn't create a new stock. They didn't give up their pension plans. So I guess it comes down to, you know, I've been buying Fords. All I own are Fords right now. I'm doing it out of principle. Am I paying more for my cars? Yes, I probably am. But it's for the principle for me. I choose to support a company that doesn't leave 50,000 ish. I don't have the exact number, but 50,000 ish old folks that had pensions out, you know, out to the wind. So just again, a thought there. which actually where I was going with all this was, hey, we don't have factories set up now that are doing all the manufacturing in cars. It's all being done by child labor and unskilled labor in other countries. Jeez, we could pay unskilled labor here just the same amount and be fine. All right. Next comment. Europe wants to pour billions of dollars into its own defense companies, but the market watchers say it may not be able to shut out American firms. No, one of the neat things is if you have the best product, people are still going to buy it. So that would be, that's interesting. 2 questions came in. I'll answer that here in a quick second. Meet the dirty 15 countries that could be hit hardest by Trump's tariffs. These are reciprocating tariffs. It's funny because he says that there aren't 15 others, but we obviously know that they are. They're listed here down at the bottom. China, European Union, Mexico, Vietnam, Ireland, Germany, Taiwan, Japan, South Korea, Canada, India, Thailand, Italy, Switzerland, Malaysia, Indonesia, France, Australia, and Sweden. Boom. I don't think we have other countries out there that really don't fall into that, but very interesting article. Trump says reciprocal tariffs will start with all countries, rejects narrower launch. Another reason why I'm being protective for the next little while. And Trump tariffs mean Europe must take control of its future, says ECB's Lagarde. One of the most, well, I really don't like the lady at all, but what an interesting thought that Europe's looking to start to take care of its own future. I think that was very telling. I think that was so telling for someone like her to make that comment that maybe the U.S. has been taking care of Europe too much and too long. 2 very interesting comments, and I don't know if I'm going to have a great answer for any of them, but so why are the CEOs so vocal against tariffs? For example, Ford CEO, who is quite vocal as he could be in this environment, well, because they're making more profits. It's simple. They're making more profits. United States citizens aren't getting better jobs, but the company's making more profits. And one of the problems is that we pay our CEOs probably too much damn money. Yes, they should be paid what they're worth if they're increasing the price of the stock, but at the cost of American jobs, again, that goes into that morality issue. That is it right? Is it wrong? Yeah, Ford really was pissed off, but it was funny because before, in the first Trump, they were willing to bring everything back, and they were going to get some tax breaks to do so. So I don't have a good answer on that one. Cameron's an experience with a flaw country like Brazil. It's tried everything but trying to do the right thing for the less favorable people. Unprepared politicians rule most of the governments and need it. Yeah, well, okay, so my Brazil was 93 to 96. And in all honesty, my version of Brazil was hyperinflation, and the politicians got themselves rich before they cared about the people. And Abraham, I'll be honest with you, I think that's happened in our politics for the last 25 years. The politicians have gotten rich instead of the people, and gotten rich illegally. It makes no sense how people at $165,000 a year job that were a bartender are now worth 13 million. That's bullcrap. So yes, I think for at least 25 years, boy, you can probably go back to maybe 35 years. I think the United States has the same problem. We have corrupt politicians who are making themselves rich and their friends rich instead of the public as a whole. And I think we have just as much problem here in the United States as it seemed like we had in Brazil in the mid 90s, with the hyperinflation down there and the fact that politicians seem to be getting bought off left and right. So just a thought there. Europe is just about intentions too many. I could agree there. It would have been better to restrict CO pay in that case and spread it to the workers without the tariff nonsense. Except we moved our workers to Mexico for Ford. But yes, should I? In fact, I can't remember which one it was, and I can't remember the gentleman, but he's a Republican and a chair of a committee who gave the Boeing CEO a ripping up one side and down the other. And he's the one that obviously said, yes, not only have you dumped the stock price by 35%, but you made, $26 million. How about you give those workers the raise and cut your pay? To where he said, we plan on doing that. And he said, yeah, right. I'll see it when I believe it. So yes, that's where we're at. We're planning on having protection on for the rest of the week. We're not looking to take it off. Part of that is technicals, and if we look at our pre-market, we're down 0.46 on the S&P and 0.61% on the NASDAQ. So it's kind of funny. Stock futures slip on investors await clarity on Trump's upcoming tariffs. He's tariffing the crap out of everyone. I don't know what's so clear about that. He's stated it, more tariffs, more fear. So we have our protection on, and we're planning on keeping it on roughly for the rest of the week. All right. Any other questions for you guys? I appreciate those three of you that were typing questions in. Thank you very much. Bull crap, Bill. But any questions for us today or for me today that might help you see what we see and what we're looking to do? Thank you, Bretons, for being traveling and still being willing to listen to me. Appreciate you guys being here. Big group today. We went up to 47 were in here today. 47 people is quite a bit. All right, I don't see any other questions coming in, guys. Have a great evening. I hope this helps you know that we were protected. We didn't have to risk things on and off today. In fact, we got to protect some things at a little higher price than we were last week. That's basically what we're sitting on. Probably looking at a down week this week, so we're going to trade it accordingly. Guys, have a good evening. I appreciate you being here. Thank you for joining me this evening, and I look forward to talking to you next Monday. Good night, everyone. Bye-bye.